Hello everyone, and it's another day in the exciting, euphoric, depressing, magnificent days of financial markets around the world. I'm going to say some things you've heard me say before. The price action looks very, very worrying. As I'm speaking to you, looking down there at the market, it is falling away very dangerously. And I think it's interesting because we've been bearish the Australian stock market for 3-4 months, and it's been falling for 3 or 4 months. We've been looking for a high in US stocks, and in the last few weeks, we've really only gone sideways in US stocks. So I do think there is downside risk here, and the price action is backing me up, even though it doesn't feel like it, because most of the financial media news headlines, sort of amplify the up days and kind of dismiss the down days. So I can understand why you would think that I've been wrong of late, but I've actually been kind of right of late. And I really do think the market might have reached a critical tipping point, or let's just call it a critical point of hypnosis. That is lulled through repetition, that these big into believing and feeling these big, becoming numb to these big down moves as if they will not matter, that in the long run, the market's only going to go up anyway. So we don't have to worry about that. Eyes off the ball. And that's very dangerous stuff. I wrote a written piece today. Please have a look at it at the acy.com website. And I talk about how, when you write it, when you're already very, very high, you have to be careful about the next step you take because there is a fair bit of risk to the downside, and markets will track lower. It's whether they track lower in a catastrophic way, or whether they track lower in some kind of grinding process, or mostly go sideways. But there is going to be a correction and consolidation period here. I think more of the sharp downside kind, given that very few commentators are jumping up and down and highlighting that this price action on the day, the last 48 hours, after everything that's happened this week, is a serious concern in the equity market. Please understand, it's Friday. I'm watching this Australian market fall as I speak, and I think a lot of people underestimate the power or the prosperity that can come from being bearish at the right time. And certainly, if you've been selling Australian equities and selling stocks like Afterpay that I was mega bearish of at the top, you've done very well. And I suggest to you that the rate of decline in the Australian market could actually accelerate. It's all very well for this kind of medley or atmosphere in the media at the moment of don't worry about the cases. They're actually really good. The fact is, the absolute numbers tell the story. Over 2,500 people in a hospital in New South Wales. And today on the Eastern Seaboard in Australia, God bless all their families, 43 people have passed away. 43 in the 3 eastern states in one day. These numbers keep going up. In New South Wales alone, it was 29 people. So whilst that's a tiny proportion of the population, it just goes to show you don't really want to get this thing. I've said all along, don't live in fear, but do be careful and wear masks. And masks certainly are doing a better job at the moment than vaccinations are. There's no doubt about that. So do be careful, please. And I don't mean to be a fearmonger at all, but please do be careful. I think the peak is within the next few weeks, but the economic damage peak is not within the next few weeks. There's ongoing economic damage, ongoing economic degradation. And when it comes to inflation in the United States, it's a full-blown wildfire. I won't go into that again. And the Fed thinks, well, if it gets bad, we'll do something. It's already terrible. It will already be eating away at the foundations of the US economy. This is why I'm very, very cautious US stocks. I'm not worried about inflation because it means the Fed raises rates. I've wanted the Fed to raise rates for about 6 months. If they'd already been raising rates over the last 6 months, like for instance, the Bank of Korea has, they hiked for the 3rd or 4th time today. I think it was the 3rd. Mexico, I think, is about the same. If they'd been sort of looking to get ahead of the inflation surge, the way some of the intelligent central banks in the world have been doing, banks like the Federal Reserve and the Reserve Bank of Australia could learn a lot from these banks, particularly the Bank of Korea in our own Australian region here. So the worry is not that it engenders interest rate hikes. The worry is that it being slow to respond, central banks will have to accelerate and increase rates far more than they otherwise would have, creating a crunch on the economy and therefore a roller coaster period moving forward for economic growth. Up, down, all over the place. Volatility is not what we want in our economic growth path. It is what our central bank is creating for us, setting us up for. The real concern about inflation, though, is how it eats away at consumer buying power, and it causes a wages spiral, and that is certainly already underway in the United States. Already in the United States, we are seeing higher inflation, higher wage growth, higher inflation, higher wage growth. It's already happening in the US. We're definitely going to see the same thing happening in Australia. So the consumer's buying power gets eaten away, but that heightened uncertainty about where the economy is going, where prices are going, the struggle to keep up with new higher prices all the time, asking for wages, wage rises, then you get industrial disputes. All of this is not good for our economic pathway. I was always forecasting below trend growth for the Australian economy and the US economy with high inflation, but I think my forecasts have been too moderate, and it's actually going to be a little bit worse than that, in that inflation is going to be even higher than I thought. Even though it's a slow burn in Australia, it's still coming with strength. And I think probably central banks eventually are going to have to raise rates a lot more than I thought they would. I mean, we were forecasting that the Federal Reserve would be raising interest rates when the Federal Reserve was forecasting it wasn't. We knew before they themselves knew that they would be hiking rates 3 times at least this year, starting in the first quarter. We forecast that pretty much, I think, ahead of most organizations in the world. We've certainly understood inflation better than any other financial institution in the world. Find another financial institution that understands inflation is currently being driven by freedom of pricing, the dislocation of previous globally competitive price pressures that were in place for the last 15, 20, 25 years. The dislocation of those forecasts of those pressures has allowed the freedom of pricing, which explains perfectly while both earnings and inflation are going up at the same time, but it won't last, and then inflation will eat away at the consumer, causing an economic crunch just when the central banks come late to the party and start raising interest rates. So I'm suggesting caution about US Australian equities, not because the Fed will be raising interest rates, but because of what will really be happening in Main Street, in the real world, on the ground, in the economic reality of these countries. It's not going to be a very easy time at all, unfortunately, and stocks have already priced in a future economic nirvana. So the spread between the pricing in and the future reality is extreme, and elastic bands can only get stretched so far. It's always possible an elastic band will break and the market will run away, but I think it's just a stretch, and we're going to see a convergence of those two things: Main Street economic reality and Wall Street sentiment beliefs. These things have to converge again, and I think the most flexible aspect of both those forces at the moment is definitely the pricing of US equities and Australian equities. Australian equities have been pricing in a tough economic scenario for some time, for a few months now. I think that could accelerate, but certainly the US market hasn't been pricing that in at all and is highly vulnerable to some sharp downside of the kind we've particularly seen in the last 12 to 24 hours. I hope you have a wonderful weekend. Thank you. I look forward to speaking to you again next week. Clifford Bennett, Chief Economist, ACY Securities. All the very best to you. Thank you.